Hello traders, how are you? Vladimir here from Traders Academy Club. And in this video, I would like to go over the last trading week using the trading systems, the SRS Pro, the Triple B PRO, and the Divergence University strategies that I teach in the Divergence University course. It was a pretty mixed week for me personally with manual strategies. It was a mixed, as I said, mixed week with some losses only by the end of the week, some profits. But the team with the systems, they managed to do some things better. And it's one of these weeks that simply proves a very important point: diversification, how important it is not to put all the eggs in one basket, not to rely only on one strategy or one system, because the market changes, the market is alive, the market conditions are changing. Sometimes it's more trending, sometimes it's more ranging, sometimes it's in a reversal zone, more technical, less technical. So diversification plays a very important role, and that was one of these weeks proving this point. So I would like to review as I said before, the trading week from the last previous week, done by my team and by myself, using the trading systems and the strategies we have, the SRS Pro, the Triple B, and the Divergence University. But right before that, if you are new to this channel, welcome to our amazing community. Please subscribe to the channel with the subscribe button below the video, and also I invite you to join us in our trading family. You can find the links to any of the projects you're interested in and you find that could be useful in your trading and in your trading journey below the video in the description or in the pinned comment. So I would like to start with the Triple B, and it's important to mention this video is to all those of you who have the systems or using the strategies, so you can learn some very important tips during this video, how to use the systems. To all those of you who don't have these systems or strategies, you can get them directly here from the website, which you can also find below in the pinned message in the comment section. The SRS, the Divergence University. So you can just get it now here, and there is an option to get it free with the brokers program that we have there. And for any questions you have, please don't hesitate to contact us. We would be more than happy to assist and to help any way we can. So let's start with the Triple B. In this week, I want to put the focus on the pivot zone. So Triple B in this Pro version is based on the Bollinger Bands, like the original strategy, but one of the strongest additions comes in play here is the pivot zone. And there are many ways to define key trading levels. That could be swing points, that could be higher time frames based on higher time frames analysis, rising supportive or dropping resistance lines, trend lines, Fibonacci levels, etc. But one of the mathematical methods, and the method I personally love, especially when it's combined with different days and different levels, like daily and weekly pivots, and that's where one of the powers of the Triple B. So I prepared myself here the list of the trades I want to go over. I cannot review all of the trades, of course, but there are a few that I want to discuss about. And the first one would be the New Zealand dollar. And I would want to explain the importance of the pivot. So first thing that I love to deal with is multi-time frame analysis. One of the ways that we improved to save some time in the systems is this, the trend filter, okay? In different sensitivity, high, medium, or low sensitivity. We also, of course, have a percentage change or a heat map during the week that we can deal with. So here is what I love to see. Trending structures. What is a trending structure? Very simple, straightforward. Uptrend, it's when you have a sequence of higher highs, higher lows. Downtrend is the opposite, lower highs, lower lows. So trend is a sequence of highs and lows in the same direction. Then after a trend is defined, I love to see pullbacks to important zones. And one of these zones is the combination of pivot zone. And from there, I love to look for my trading opportunities. So what we had here is a quick, as you can see, simple view, bullish momentum after breaking this high, the resistance, okay? Retesting this area with a corrective movement. Watching on a 4-hour chart, we have no divergence against us on a moving average. So it proves that the trend still has some room to go to continue. And the main part here is, look at this. So we have a daily and weekly combination. See, daily pivot and a weekly pivot. This indicator, by the way, comes with the Triple B. It's a built-in automatic scan. We are riding all the Bollinger Bands, as you can see here, bouncing off the Bollinger Band, okay? Respecting this money zone, as you can see, okay? And it's not only the current day pivot, but also here, as you can see, 1 day before pivot. So all this is a massive area. Easy call for an easy buy, and we break above the most recent fractal, gaining the required momentum. And as long as this low holds, the assumption here is that the trend continues. And so we did. By the way, we could say maybe even a bit lucky here, because as you can see, after the beginning of the up move, it retested the zone. Okay? Now, of course, it could always go and spike the low and kick a stop loss. That's why there is a stop loss, so we don't fall in some surprises. But in that case, it didn't, and eventually the trend continued and delivered the move we were anticipating. So pay attention here to the importance of trending structure and the pivots, because in the next example, I will show exactly the same, just in a bearish direction. So what happens here is, first of all, the flip, as we can see. Okay, so fake high created, this is the Dow Jones in play, and we flip the trend, making the lower lows. Okay, but not only that, we gain bearish momentum, lower highs, lower lows to the downside. After flipping down, this becomes a resistance zone. We come to retest the area in 2 corrective ways. Quick scan on the higher time frame teaches us that there is no divergence to end the bearish move. So again, the combination of the price read, it was a short move up that flipped, making lower lows and creating the bearish momentum by making lower highs, lower lows. So the price read supports the bearish view. Pull back to the resistance zone and again look at the pivots. Okay, weekly and daily pivots combination. Okay, and also, as you can see here, support zone, right, which is now resistance from the previous day. Very strong combination without any signs it's over by breaking the most recent fractal. And of course, by respecting the Bollinger Bands here, with a quick scan of the higher time frame to make sure the trend filters are lined up for the bearish direction, synchronized bearish direction. And that's pretty much it. Again, easy trade, easy decision for a sell. The next one I want to discuss about would be 2 of the Aussie franc, because they both would basically prove the same. One of them lost, one of them profit, which proves a very important point. Even though you are able to define all the things I just showed, trending structures, levels, pivots, everything lines up, there would be never a guarantee that any trade would end as a profit. In the trading business, all we deal with is probabilities. And as long as you can improve your probabilities, you do that by the analysis. And this means that if you work with one-to-one risk reward, but above 50% success rate, even like 52% success rate, you already start making money. At the end of the day, it's all in the numbers. Of course, the technical analysis, the technical proven methods, of course they help. That's why we use them. But it all sums up in the numbers at the end of the day, and it's important to understand it. Okay, so Aussie franc, the first one, which actually lost, was at the beginning of the week. But look, what did we have here? We got a gap down, but we regained the momentum, right? After the gap down, we regained the momentum by making higher highs, higher lows. Of course, in a gap, it's tricky to trade because there is always a possibility that it's just touching and reversing on us. In that case, why I personally love the bullish direction is because the trend is absolute. And none of the important lows from the higher time frame was actually breaking down. So what we got there, yes, a gap, no problem. And then new momentum. The Bollinger Band is screaming a buy. And not only that, the pivots, look at the pivots again. They are in a massive play here. The previous daily pivot is here. This zone is holding and holding well. So it's again easy decision. And unfortunately, though, it started well, almost reached the target zone that we've had, which is right next to the previous swing highs, but it was missing a little bit, as you can see, and flipped on us. But here is why we traded another opportunity right here, and this one did pay. I'm pretty sure it was here. Let's just double check. Yeah, it was here from the same analysis. Exactly. So we are still in an uptrend. Okay, we are making the corrective movement, and we hold massively the weekly and the daily pivots, right? This area still holds, and again, the uptrend is there. So yes, it's not always necessary, of course, to increase your exposure to a given instrument. For us, we were not exposed too much, which is absolutely fine for us. The trend is there. It improves the risk reward, by the way, because now we are not aiming to the top. Now we are good to aim our target towards the gap zone. In that case, of course, we can't predict it in advance. In that case, it worked out, and this trade really paid, while the other one did lose eventually, as I said before. Of course, it could flip on any time on us, and we would end up with 2 losses. That's not the point here. The point here is stick to the same logic, the same strategy, and even though there will be losses on the way, with the improved odds by multi-time frame analysis, and the Triple B helps here with the automatic trend scans, the pivot levels, and the simple price follow by higher highs, higher lows, and respecting the important zones, you increase your probabilities to end up in profit. So that was the Triple B. I hope you see the importance of the pivots in play here, and that's pretty much the purpose of this trade. So the next ones I would like to talk about would be from the SRS, and once again I want to mention here all the systems are available for you here. We get it now. There is also an option to get it free with the broker's program. So if you find that it could help in your trading with these methods I show and the tips I give you, you can get it directly from the websites, and you can get access to them below the video in the pinned message. Okay. So the next one is the SRS, and also here I want to talk about the principle of the trend flip, which I already mentioned in the Triple B, but I want to show you how it's with the SRS, which is designed for trend follow, direct trend follow. And here we are. So the first one which I want to talk about would be the dollar CAD sell. I'm pretty sure it was. Yeah, this one. So you would see that on the other pairs as well. Very, very, very important tips which I want to share here. So first of all, as always, what we love to follow on the SRS, it's the clear trend. Quick scan on the trend filters, right? The SRS candles, which define the trend, as you can see them here, right? What can we learn? 4 hour, 1 hour, very bearish. On the 15 minutes, we have majority of the candles are bearish as well. This is a bearish momentum without any sort of doubt. The sentiment and the momentum here are also bearish. So pretty much logical to sell the rallies. What did we have in that place? So lower highs, lower lows, again, pretty clear, speaking for themselves. We got a pullback, rejected and respected by this resistance area, the swing highs, right? And the interesting part here, we got this correction, right? We are going below that. And this is what I love to see, the flip. You see that? The lower lows. So not just the corrective structure is breaking, not just we are rejected in an important support and resistance, we are also flipping, making new lows. This little trick would take you from 50% chances in your analysis directly to the 70% analysis. And this little trick, when used with clear trend right, would improve your chances to end up in a winner. In that case, it didn't. You can see it started but flipped, but you would see the other cases where it simply proves my point. And that's why I wanted also to show you here. Never forget, as good as any technical method could be, there will be times that the market would flip. It's a market, okay? That's buyers and sellers. Nobody cares of line of you draw. Nobody cares of lines I draw. Nobody cares of our wishes, our willings, and our hopes, because the market will do what the market has to do. You have to remember, this is a business of numbers. And all your focus has to be is work with positive risk reward in average, which means 1-to-1 plus, and 50% success rate plus. Okay, you do that by improving your technical methods, and the systems comes to help here. They don't guarantee any sort of profit just because there is an algorithm behind them. They increase the odds. Okay, and it's very important to understand in the business of numbers, in the world of trading, it's all about the numbers, it's all about the odds. So this was the dollar CAD, which I wanted to show, and the next one would be the pound dollar here, and it's completely the same. So look what happens here, and I want to explain the same logic. Look what happens. So we flipped, right? It was an uptrend, we flipped, we make lower lows. It starts from here, it continues here. Now the trend analysis. Are we in a bearish trend? So 4 hour shows yes, 1 hour shows yes. The quick scan of the candles teaches that we are increasing the bearish momentum. You don't need to be genius to understand that. And we want to see a correction. We got a correction, ABCD. We reject by this swing high, right? All we can see through this level, it's spike, spike, spike. We don't have any certain hold above this area. So in a clear trending structure, in a clear trend conditions, what we got here besides the ABCD break, it's why it's getting wider. We got the flip, right? Last highs flip to new lows. And again, like you saw in dollar CAD, and there it failed, here it simply delivers the move. Both take profit 1 and take profit 2, continuing the bearish trend as it is. No magic, no any unbelievable solutions, simple logic, simple methods, and the SRS comes to help by scanning the trending conditions automatically, by showing you this momentum and the sentiment, and by increasing your odds, by increasing your chance to ride with the trend, and it alerts you once it finds these conditions. And the next one on the list would be the S&P sell, which is right here. Same logic exactly. So we flipped from higher highs, higher lows. We flipped to make lower lows. We gain the momentum by making lower highs, lower lows. In that case, it's a zigzag, 2 down, 2 up, and the breakout of this corrective movement. The broken lows are now become as a resistance area. We break it down. We come to retest. The trend flips here. Look at that in the 4 hour. Back to bearish. 1 hour is absolutely bearish. The momentum is very bearish and the sentiment as well. It's again easy decision, but here is the trick again. The most recent highs flip to new lows. No, not just this ABCD breakout correction, but the lower lows in a bearish trending structure in the higher time frame bearish analysis as well. So this one specifically also delivered the move, but that's not the point here. The trick I wanted to show you here is trending structures, the flip of the trend where support becomes resistance or resistance becomes support. And when your corrective movement breaks down, not just the correction, but also the most recent lows, the flip, do that, it will increase your chances dramatically, and you will see that from 50% success rate, which is by default, boom, towards 70%, and that's dramatic change in your trading performance. The final one would be the Divergence University, and here my focus would be not just on the divergence techniques, which also extremely important, but what I want to show here and is the importance of risk reward trading. Look, it was, in terms of success rate, it was bad week. As you can see, most of the trades were losses here. And there will be weeks like that. There will. What you have to understand, it's again, it's the risk reward and the success rate. If you work with one-to-one risk reward, let me show you this in a very simple way. So let's go here. Okay, let's say you work with 50-50. So you win one, you lose one. With one-to-one risk reward ratio, you can't make money. You win one, you lose one, you are in zero. But what you can do is to improve or the one-to-one or the 50%. So if you improve that to be 60-40, which means you win 6, you lose 4. With one-to-one risk reward, you still make money, +2. Okay. The other way around is to increase, you still lose the 50-50, but you increase the one-to-one and make it 1-to-1-5 or 1-to-2. And then you can win 1, lose 3, win 1 more, 1.5. You are in profit by making less profitable trades, less than 50-50. This is the importance of number, and the divergence techniques help to achieve that exactly. By how? By respecting, when you place your targets, make sure you place them in a reasonable zone, ideally around the next swing highs from the same or the higher time frame, or swing lows, because the market, and you would notice that when you check the market, loves to move from, right, from like in the flipped, right, to the next swing high, then pull back, then to the next low. That's how market does work. It goes from high to low to back to the lows, back to the highs, because that's where the money is, supply and demand. That's where the sellers take control or buyers take control. If you think about it, when a low is created, buyers took control. When a high is created, sellers took control. Right? So it's a zone of interest. So here are the few examples which I want to talk about. First of all, let's see the euro dollar. Okay, why did we decide to take an attempt for a buy here, even though this is aggressive and it's against the trend, because the trend was absolutely bearish? So what we have here is, look at that. First false breakout, right? This low was false breakout and a bullish divergence. Lower lows on the chart, higher lows on the moving average. Then we have this trend line connecting the lows, again false breakout, and again divergence here and here, and here also, of course. So absolutely strong sign that there, if it flips, it should go all the way up. We also have the zone of 110, sorry, 1.10 here. So as long as the market respects this area, there is a good chance we would go back to retest the previous swing highs. Now here comes the importance of risk reward. If I'm right, I'm gonna profit here more than 1 to 1. If I lose, okay, I lose. So on the next opportunity, I will profit. In this case, it lost. But the analysis was there, the probabilities were there, and the risk reward was in my favor. In this case, it losses. The next one, same technique exactly. Okay, hits, look at that. So we got a false breakout here, right, with this divergence. Then the trend continues with making the new lows. And again, it flips. Look at this divergence and look at this divergence. It's there. It's screaming a buy. We have a classical engulfing here. The round number of 122 for the intraday or short-term trading. It's important round number. Okay, fine. We give it a shot. And again, previous swing highs, right? Now look at that. The risk reward is in our favor. Same logic like with the euro dollar. But one failed, the other one delivered. And the importance of the risk reward proves the point I wanted to explain. There is no problem of making more losses than wins, because when the wins you make sure they pay more than the losing trades cause you to lose. At the end of the day, it's all in the numbers. And there will be weeks like that when there will be more losses, there will be days where there will be more profits. Nobody cares. Besides you and your ego, nobody cares. Because in trading, it's always for the long run and it's always a business of numbers. Okay, and I hope you understand this important thing, and I wanted to explain that. Now also I want to explain here a mistake. We didn't pay attention to that, but I want to give this tip. So I don't know if you followed my weekly forecast from the previous week. If you didn't, you can check in the YouTube channel, of course, and you will see it there. And I was looking to buy the cut franc. And here we spot a bullish hidden divergence. So we are in double trending conditions. So this is from the 4-hour, the pink, higher highs, higher lows. And the blue one here, it's from the 1-hour on the most recent leg. So we see that as a double trending conditions. There were no signs against us on the 4-hour chart. This high was cleaned as well. By the dip sounds like the right thing to do. But, and here we got the hidden divergence, okay? Higher lows on the chart and lower lows on the indicator. But one thing I don't love to do is to trade when the correction is in one leg through all the Fibonacci levels. So if we take this and we plot Fibonacci's, 61.8 would be here. And this was one straight leg through all the Fibonacci's. That's my own filters. My team knows that. We didn't pay attention to that. It was a mistake. And when you do mistakes, you pay for that. We did a mistake. We paid for that. And this is why I show you this technique, because one straight move in a trending structure, you can accept corrective structures, which is ABCD, which is a range, or one leg. But if it's one leg, never go through directly through 61.8, because if it does, it means the pullback in the corrective structure is not respected, and it's a big red bulb or sign you want to pay attention to. We didn't, and as I said before, when you don't pay attention to the details, you pay money. Okay, It's that simple. You don't pay attention, you pay money. In that case, we lost for a reason, because it was wrong one, and it could be avoided, but it wasn't. It's part of the business. Learning from that, moving forward, trying to prevent and avoid same mistakes in play. So when you see these filters happening, this trick showing you, and you're looking to buy the dips, but it's one straight leg through Fibonacci levels, be careful. Don't fall in these traps. That's why I wanted to show that as well. So that's pretty much it for this video. I really hope that you learn some tricks, learn some important tips, and see that in action. Again, nothing to celebrate pretty much from previous videos, mixed results. My manual wasn't very good. Some of the systems did better. At the end of the day, my message is always remember, there will be bad weeks for everybody, for me, for you, for everybody. There could be even bad months. Trading is a long-term business, and you always should stick to your plan, stick to your techniques, respect your techniques, and try to avoid mistakes. As long as you keep the odds and the risk reward in your favor, the chances are with you. As simple as that. Okay. Once again, all the systems are available for you, also free with the brokers program. You can get the access to them below the video. In the links are there in the pinned message. So I hope you find this video useful, and I want to wish you a wonderful trading week ahead. Thanks for your time watching. I'll see you around. Bye for now.